Palantir just dropped a blowout earnings report, and Wall Street was not ready for this one. After the closing bell today, August 3rd, Palantir Technologies reported second quarter 2026 results that crushed every estimate on the table. Adjusted earnings per share came in at 41 cents, blowing past the 35-cent consensus by more than 18%. Revenue hit $1.94 billion, smashing the $1.81 billion analysts had penciled in. That's a 93% year-over-year jump, the fastest growth Palantir has ever posted as a public company. And this isn't a one-off. This marks the 9th consecutive quarter Palantir has beaten Wall Street's earnings expectations. CEO Alex Karp didn't hold back either, telling CNBC that no business at Palantir's scale has grown anywhere close to this fast. Shares initially spiked as much as 12% in after-hours trading as investors digested the numbers. If you've been watching Palantir's wild ride this year, down nearly 30% year-to-date before tonight, this report just changed the entire conversation. Let's break down exactly what happened, number by number. The real story of this quarter is the United States, and specifically the U.S. commercial business. Palantir's U.S. commercial revenue soared 149% year-over-year, reaching $764 million for the quarter. That's not just growth, that's acceleration, up 28% from the previous quarter alone. Enterprises across the country are racing to deploy Palantir's AI infrastructure platform, and it's showing up directly in the numbers. Total U.S. revenue, combining government and commercial, now makes up more than 81% of Palantir's entire business, growing 115% year-over-year and 23% sequentially. This shift matters because commercial revenue tends to be stickier and more scalable than government contracts, which can face budget delays or political uncertainty. Palantir's AIP platform, its artificial intelligence platform for enterprises, appears to be the engine driving this commercial land grab. Companies aren't just testing Palantir's software anymore. They're scaling it into full production deployments. That transition from pilot programs to enterprise-wide rollout is exactly what bulls have been waiting to see, and this quarter delivered it in a big way. Growth is one thing, but Palantir also proved it can grow profitably, and that's what separates this from typical hype-driven tech stocks. GAAP operating income came in at $912 million, representing a 47% margin. On an adjusted basis, operating income hit $1.19 billion, a stunning 62% margin. To put that in context, analysts use something called the Rule of 40, where you add a company's growth rate and profit margin together, and anything above 40 is considered elite. Palantir's Rule of 40 score this quarter was 155%. That's nearly 4 times the benchmark for a healthy software company. Net income came in at $1.07 billion, or 41 cents per share, compared to just $329 million, or 13 cents per share in the same quarter last year. That's more than triple the profit year over year. This is Palantir's third straight year of GAAP profitability, and the balance sheet remains extremely clean, with billions in cash and essentially no debt. For a company once criticized for its valuation, these are the kind of fundamentals that start justifying the premium. Behind every revenue number is a pipeline of future business, and Palantir's contract growth tells you this momentum isn't slowing down anytime soon. Total contract value for the quarter came in at $3.37 billion, up 49% year over year. That's a critical metric because it represents deals signed now that will convert into revenue over coming quarters and years. Strong bookings growth typically signals confidence from customers who are willing to commit to larger, longer-term agreements with Palantir. It also gives investors visibility into future revenue, rather than relying purely on quarter-to-quarter guesswork. Government contracts remain a meaningful chunk of this pipeline, but the acceleration is increasingly commercial in nature, which reduces Palantir's dependency on federal budget cycles and appropriations timing. When you combine explosive current quarter revenue with a growing contract backlog, you get a company that isn't just posting a good quarter, it's building a longer runway. This is the kind of data point that tends to get less attention in headlines, but matters enormously to institutional investors modeling out Palantir's next several years. Now let's talk about what Palantir expects going forward, because the guidance here might be even more important than the quarter that just closed. For the third quarter of 2026, Palantir is guiding revenue between $2.16 billion and $2.164 billion, along with adjusted income from operations between $1.292 billion and $1.296 billion. For the full year, Palantir raised its total revenue guidance to a range of $8.15 billion to $8.158 billion, representing 82% growth for the year. U.S. commercial revenue guidance alone was raised to exceed $3.424 billion, representing at least 134% growth. Adjusted income from operations guidance was raised to a range of $4.889 billion to $4.897 billion, and adjusted free cash flow guidance now sits between $4.5 billion and $4.7 billion. Raising guidance after already beating estimates is a strong signal. It tells investors that management isn't just riding a one-quarter wave, they're seeing sustained demand well into the future. This kind of upward revision, especially this early in the year, is exactly what tends to fuel continued investor confidence heading into the back half of 2026. So how did the market actually react to all of this? Shares of Palantir surged as much as 12% in after-hours trading immediately following the release. That's a massive one-day move for a stock already sitting in a heavily watched valuation conversation. But context matters here. Palantir had lost nearly 29% of its value earlier this year, dropping to a 52-week low around $106 in June, as broader concerns grew about whether the AI software trade was running out of steam. Heading into this report, the stock was trading around $123, with options markets pricing in roughly a 12% swing in either direction. Valuation remains the elephant in the room. Even before tonight's pop, Palantir was trading at roughly 71 times sales and 113 times forward earnings, multiples that leave almost zero room for error. Tonight's results gave bulls exactly the ammunition they needed: blowout growth, expanding margins, and raised guidance all at once. But skeptics will point out that at these multiples, perfection is now the baseline expectation, not the exception. So where does this leave investors heading into the rest of 2026? Palantir just delivered one of its strongest quarters as a public company, beating on revenue, beating on earnings, expanding margins, and raising guidance across nearly every metric that matters. The U.S. commercial business is no longer a story of potential. It's a story of execution, with enterprises actively scaling AIP deployments in real time. That said, the stock's valuation means the bar for future quarters just got higher, not lower. Investors will want to watch whether this commercial momentum holds through Q3, whether government spending stays stable amid ongoing budget discussions, and whether competitors chasing the same AI enterprise market start eating into Palantir's lead. The next earnings report lands November 2nd, and based on tonight's guidance, expectations will already be significantly elevated. For now, Palantir has silenced at least some of the skeptics who called this year's sell-off the beginning of the end. Whether that momentum continues is the question every PLTR investor will be watching closely over the coming months. As always, this video is for informational purposes only and is not financial advice.